thank you very much for sticking with us. We know it's been a long day, and at this time of the day, you're like, okay, I'm ready for drinks. But stick with us; it should be an interesting conversation. So I will quickly introduce myself before we get on with the actual panel session. So my name is Emem. I'm here in my capacity, as the co-lead of Tech London Advocates Africa. Everybody keeps asking me what the TLA stands for, so that's what it actually stands for. And for any Nigerians in the room, yes, my name is Emem, but my name is also Titilayo. And every single time I say Emem, and then there's a Yoruba person, I say Titilayo, they say, better. So let's just get that out of the way. So as I said, I'm here in my capacity as the co-leader of TLA Africa and the soon-to-launch Tech Nigeria Advocates as well. So TLA and GTA, the Global Tech Advocates, is a 30,000 strong network membership organization of scale-ups, startups, academics, corporates, and policymakers who are sharing information in tech. So they're sharing information, experience, and ideas around technology. We're currently in 29 cities or regions around the world. That includes Brazil, Mexico, Shanghai, Singapore, of course, as well as London. And we're in very specific sectors as well. So some were mentioned today: smart cities, health tech, fintech. But we also concentrate on very specific initiatives as well. So future of work being one, circular economy, and immigration. And as a matter of fact, the Tech Talent Visa was actually a TLA initiative alongside Pennington Marshes. So there's a lot that kind of TLA kind of quietly does in the background, especially with government, to push certain things to make it happen. So that's enough about me. Now we're going to concentrate on the actual conversation around embedded in finance, which I'm very excited about because anybody who knows me knows I'm a big fan of all things fintech. So for those of you who don't know, but I think Adetayo actually mentioned it when he mentioned what embedded finance is, because that's exactly what they do. So you just have existing businesses that are there who are not traditional finance providers who are then providing a finance solution. That could be around insurance, payments, or lending. And the one most people will already understand is the fact that you will go and buy your furniture from IKEA or whoever from made.com, and they'll provide you with finance to pay over a 2-3 year period. That is embedded finance. So there is nothing new about this sector. It is so old, it is ridiculous. But when it comes to Africa, it's one of those things that hasn't really existed. So it's exciting that we've actually got to the point where embedded finance has become a thing. So some of the figures I have, which are crazy and wide. So PwC forecasted, a 5 times growth from 554.2 billion in 2022 to 248 billion in 2032. So that's over a 10-year period. But then you get, wildly different estimates. So I saw an estimate which said, we'll get to 139 billion by 2026. Yet there was another quote about it being the retail sector alone. So that's mainly going to be driven by buy now, pay later. The retail sector alone would be worth $3.5 trillion, accounting for 45% of the total finance embedded finance market. In the next 10 years, which is mind-blowing. Now, whether some of those numbers are conflated and whether they're not, the point is we're actually kind of at an exciting time when it comes to embedded finance. So, let me get you to introduce yourselves first before we get into the conversation. So, Ann-Elise, do you want to introduce yourself and we'll go down the line?
Sure. Hi, everyone. Thanks for holding out for this session. I'm Ann-Elise Francis. I'm head of growth at Turaco. Turaco is an insurtech that is operating in Kenya, Uganda, and Nigeria. And the focus of Turaco is to make insurance more accessible and affordable to the mass market. And we do that through B2B partnerships and using those partners that want to sell another financial services product to their end consumers and using them as a distribution platform to get to that end consumer, that farmer, that Boda or Okada rider, that small shop owner who's not formally employed and would not have insurance, and doing a lot of customer education and using technology in the background because one, most people are not familiar with insurance, they don't trust it, so really trying to figure out with that partner what's the appropriate insurance product to apply to that partnership, and what's the right way to sell it to those end consumers, and using that partner's the financial transaction that end consumer has with with the partner, whether it be a loan or having a wallet, as a way for them to pay for that insurance on a flexible way of doing it monthly or quarterly, so it's not so hard on their pockets by doing a 12-month annual policy. So that's what we do at Turaco.
Yeah, thank you very much. Henry Mascot, I'm a co-founder and CEO of Curacel. At Curacel, we're building what we like to call the modern infrastructure for insurance across emerging markets. Really, when we think about what we're trying to achieve, it's pretty much like what everybody in fintech is trying to achieve, which is try to drive financial prosperity for Africans. We think, again, we play in the insurtech space, similar to Turaco. We think insurance is very important. As we start to have, growing middle class who buy assets, who get value, that are valuable. As we start to have credit and payments, insurance is one of those very key stocks that need to exist. And so for us, we've taken a stand to say, hey, how can we help drive insurance penetration currently in Africa and in most emerging markets? Absolutely a small number in Africa, I think it's 2-3%. And that's because of South Africa. In Nigeria, it's 1-something%, which is where we're originally from. So we deploy technology, initially enabling insurance companies or players within the insurance ecosystem. We're a platform, so we've got a couple of products, from an AI-driven claims processing and fraud detection system that powers right now about 20 insurance companies across 8 African markets, to, again, an embedded insurance platform, which is basically a technology platform that enables banks, fintechs, or even insurance companies to distribute their products via API widgets or digital channels. We're a YC company backed by Tencent and Google. We're like a 4-year-old company, team spread across 5 African markets. I'm happy to discuss embedded finance.
Very great to be here. My name is Chimezie Emewulu. I'm the group CEO of Seamfix. Seamfix focus on building identity management solutions so that companies like Curacel and Turaco will be able to onboard users. Simply because we believe that in Africa, that identity is a right, is not a privilege. In Seamfix, we believe that everybody deserves equal access to opportunities, and nobody should be excluded from opportunities on the basis of their identity. So we focus on enabling access, on enabling those people to have digital identity. One of the biggest challenges we have in Africa, as we discussed from morning till now, is the fact that you have a lot of initiatives set up by many leaders in Africa, like you have the Pan-African Payment and Settlement System, you have Africa Continental Free Trade Zone Agreement, so many multilateral agreements signed just to integrate Africa and transform Africa. The key underlying word there has been digital transformation of Africa. It's impossible to do that without a digital economy. And behind a digital economy is digital identity, which drives the key. So fundamentally, you need to be able to identify people and enable them access to various solutions and various services. And that's what Seamfix is focused on.
Okay. All right. So as I mentioned, some of the figures that are floating around at the moment in terms of where embedded finance is going in the next 10 years. But what I want to get from you guys, all three of you at the moment, is what are some of the key trends that is actually driving this growth on the continent, be it in insurance or be it in verification and ID. So yeah, anybody who wants to take that question first, and then we'll go along. Chimezie, do you want?
What is driving what growth?
What key trends are actually driving growth in embedded finance on the continent at the moment? So if you want to start.
Oh, okay. Okay, so like I had mentioned before, a primary thing, primary driver for us is really ensuring that identity is there in place. If you look at the fact that 30 countries in Africa don't have digital identity systems in place, and you're talking about embedded finance, where you embed finance in different processes. Now we're moving a lot of the processes that are traditionally physical, moving them online. You now need to be clear, who are you dealing with? If you take, for example, what the PAPS is doing in terms of trying to switch transactions pan-Africa, you quickly realize that a big headache for most central bank governors is who's on the other side of the transaction. So a central bank governor of Nigeria will probably know that I debited this account in Nigeria, but he doesn't know who it was sent to in Kenya. So when you now bring that up and connect maybe insurance, for example, you start dealing with a lot of situations like who exactly am I giving access to this? Like, for example, if you look at the guys giving loans, if somebody takes your identity or steals your identity and use it to borrow money, then they will start looking for you. Last year, for example, my dad was kidnapped and the kidnappers were asking me for 40 million naira. And eventually the man was released. But in that process, I learned a lot about synthetic identity, where somebody can actually take over somebody's account, create a bank account with most of the online banks that you saw, and start receiving ransom funds into those accounts. And you track it, it goes to somebody else behind the scene. You're trying to get to the real person behind the scene, but you're not able to get access to that real person because the real person is not even aware that he has a bank account. And imagine that bank account now borrows money or takes a loan or buys a car or gets access to one automated service or the other, then you have a very big challenge. So I think the fact that most leaders are moving increasingly to ensuring that they put proper ID systems in place, I think that's a key driver. And I think my colleagues will have other contributions on other major drivers, at least the ones they've seen in their own market.
Yeah. So maybe I go next. So I think so we see one of the key drivers we see for embedded finance as well is obviously on the continent, like you said, it's not new. It's not really a new concept in the West, really. And I think there may be two drivers that I've mentioned. The first would be payments. Payments has gotten more digital. It's a lot more easier now to collect payment thanks to the, again, I think payments has always existed not that old, but M-Pesa, a little bit old and earlier. But for the bigger ecosystems, we started in Nigeria. We're not a Nigerian-only business. Nigeria may be 40% of our revenue these days. But in Nigeria, obviously, the payment revolution started in the past 6-7 years with the folder waves and the pay stacks. And obviously, that has enabled a lot of interactions to now happen. It's what has led to the startup and fintech boom within the continent. So I think that's one key driver. For the first time as a business, you can give a loan and you can collect it digitally. A transaction can happen online, and then you can receive payments. And so I think that's one of the very first drivers for embedded finance, because again, now finance is possible online without having to go to branches. One of the biggest Nigerian banks obviously shut down. So payments first, and obviously second thing is technology. Again, technology has always existed, but again, obviously when you now combine technology with now the ability for businesses to collect payments, perform transactions digitally, I'd stop there. I think those would be the two trends I'll think about, and then Ann-Elise will do the rest.
Yeah, and just coupling on to that, I think for us, what we've seen at Turaco is the growth is solving for the distribution issue of how do you reach that end consumer on a mass scale, and doing that through partnerships. So for instance, we in Uganda have partnered with Airtel Money. Within a few months of launch, which we launched, what month are we in, June? We launched in late April. We've got over 400, we're itching up to 500,000 customers through getting to a large telco, or getting to a large bank or a large digital bank in Nigeria, solving for that distribution problem of how that end consumer, who again might not be formally employed, might not have traditional access to financial services like insurance, and also doing that customer education, which is important. So I think for us, it's the developments in the payments side of things. It's the development technology, but also the distribution challenges and how to solve for that.
And if I want to add, just one more thing, I thought they would mention, but maybe they didn't think about
You
it.
didn't listen to us.
So something I'd like to quickly add is the increasing AI and especially data, availability of data. So you see the fact that you have more access to different sources of data that you can merge together, connect to the same identity, and take an instant decision to decide to give somebody access to something, maybe give the person access to a certain finance option or something like that. I think that's really very important, right? So I just wanted to raise that.
But it's funny you should pick up on that, right? So because this is one of the conversations that was had earlier this morning with in the business of payments conversation. Yes, there is the data, and there's an abundance of data, but a lot of that data is still siloed, right? So there is no sharing of that data vertically, which is exactly what needs to happen. I'd actually be interested to know how, companies like yourselves, especially, in ID verification, can help to solve some of that problems, where because you have access to people's, ID and some of the partners that you're working with, you can see how people are behaving depending, in various different transactions that they have in. Where do you guys sit in that? Where are you going to play in that space? Are you going to be, one of the guys that's going to help with the heavy lifting, as was actually mentioned this morning, in terms of connecting the dots, bringing it all together, taking them out of the silos?
That market will have very few infrastructural winners. I keep talking to a lot of my colleagues and said, see, somebody is going to do this and somebody is going to win. Whoever that does that is going to be the winner, the infrastructural winner, because that person, everybody is going to depend on that person. And it's also important to consider that that organization or whoever that person is must be able to still natively identify each of the persons while connecting that data to them. So that I used to think my name was unique. I used to think my full name is very unique, that is belonging to only me, until right now we digitize the process for national ID issuance for the government of Nigeria. So every Nigerian here, if you're a Nigerian, your information was probably processed through my system. And then I realized that from the system, there are more than 3 Chimezie Emewulus with different pictures. So if you take my name and go and cross-check it against other databases, you think it's me that is all over those places. But it's not me, it's another person altogether with different picture, different biometrics, right? So somebody has got to connect that, but not just connecting the national IDs or the government identities. Just a lot of value in the data that the telcos hold that also needs to be brought together, because they know a lot about people. But then also the guys in the fintech space will also be willing to share access to the same information, because if you think about it, in the insurance space, if you insure somebody and the person messes up, and naturally in the UK the premium will go up, but in Africa the premium doesn't go up. Why? Because the data is not being shared, and even if it's being shared, somebody is willing to say, hey, don't worry, they're willing to take on your business without and carry that risk, believing maybe they are not going to have a problem. So that has to be done, and then the industry needs to just somehow be able to come together and agree on regulations, basically.
So I just want to go back to insurance a little bit. Now, as we all know, insurance has been notoriously difficult to establish on the continent. So what is it about embedded finance that's actually helping to help insurance finally get a foothold into the continent? I mean, this is especially a problem at the consumer end, because the average man is just like, sure, you want me to give you money. For what now? Because this problem that you're saying, well, but this massive life event may happen. Oh, what if it doesn't? So why will I give you money? But what is now happening that means that for them, that change of mind is happening? How is embedded finance enabling that?
Yeah, those are conversations I have quite often in the field, and it's hard to explain to a farmer, will I get my money back? If I'm like, okay, let's sit down. I think for us, it's going through the partner, going through a business that end consumer is using their products or services every day and have been using that for quite some time, there's already a level of trust already built there. I use Paga for payments. I use M-Kopa for solar products. I use Airtel Money for my transactions. So there's already an existing level of trust there. That's the way that we come in. There's also a heavy piece of the education work, not only at the point of sale, but throughout that journey, and continually shouting out when we pay a claim that this is actually true. Your neighbor actually got this claim paid. So I think going through partnerships, making the process really easy for that end consumer to sign up, no bulky paperwork, making the process really easy for them to, one, understand what that appropriate product is. It's not going to be something that's very complex. Using technology to do it, they don't have to go to a branch to sign up and give paperwork, as well as the claims process, making that really easy and simple with just a few steps. Going through a partner and having that trust and trying to build that trust throughout the entire journey is really what makes it work.
Okay. Yeah. Maybe I can add in a thing or two. So we're very, again, obviously, since we're enabling the whole insurance ecosystem, distribution is one of the parts that we're very excited about. So for us, obviously, our part is not just in distribution, but like end to end of the insurance process. But the reason we're very excited about distribution is, again, when you have a market that is emerging where only about, the penetration, again, penetration is in comparison to GDP, but like in terms of the actual absolute numbers, is still like very abysmal. So the value, or the opportunity really in the space is to be able to get more people insured. And so maybe I'll talk about two things. I think one of the values for embedded and why it's embedded insurance, it's also not too dissimilar from like lending and like embedded payments, is the cost of distribution, right? Historically speaking, I also talk about like why insurance is mainstream in the West, and not so much here. Is like when insurance started, like there used to be insurance salesmen who'd like knock all the doors, like in the States, or like, and like that technically when you listen to like motivational speaking on YouTube, the insurance sales guys are always like that because they work very hard and like very disciplined. But again, you don't have that infrastructure in Africa, right? Like very few people lived in cities. There were very few addresses and all that. And so the very difficult thing for insurers is the cost of distribution. How do I get this product to people, right? And historically speaking, this has been very difficult. And so insurance is also like, it's not a high margin business. So your cost needs to be substantially manageable if you're going to build a scale business, because I believe we're all like startup people. So the more, if you're building at scale, the more your cost is not uniquely, not making sense, the more you're running out of business. So it's very valuable that the cost is low. And so for the first time, like Ellis mentioned earlier, is distribution. And so we think that is where embedded insurance, is exciting. But if also embedded loans, is like now you have people who have massive access to customers, whether that is telcos that she mentioned or banks, or again, in our business, we're infrastructure. So we're not just enabling transactions where it's human beings on the other side, but transactions that don't have human beings. You're moving goods in transit, you're giving loans, you're doing any sort of transaction that involves insurance, you have access to those transactions, right? So I think that is, I think that's the first one, or, I think I've kind of like combined two of them. So I want to talk about their cost and distribution. And so, okay, the second one actually, so no, that's not the second. So second one also is, so we're very excited about, there are different models of like embedded insurance. Like there's them, in the industry, there are different models, but I just talk about two, where it's hidden in something you're doing and where you get to opt in, where you get to choose. So we're also very excited about the models where it's hidden, right? So you don't have to decide to pay for it. Like it's embedded in the transaction. And so we've got like big like logistics companies in some of the markets we work in that just tell you, hey, every single time you do a shipment, it's covered, right? So they don't have to tell you, do you want to cover it? It's covered, and you know you get the value without deciding as well, right? And so, yeah, so we also have like digital bank use cases where you're like, oh, I'm on this plan. And if I'm on this plan, I automatically get health insurance or travel insurance. And we think that is that model is exciting because now the user does not have to actively think about making that decision, right? And which is one of the biggest bottlenecks. Now you're trying to sell them something, they're like, no, we don't want to get it. But if you're already getting the value at like very affordable without thinking about it, we think that is one of the, so nobody has to convince you or educate you or anything like that.
Yeah, fair enough. So, I mean, embedded finance is often solving a problem for consumers, right? So it's because it's solving the access to finance problem, which is a very obvious one when it comes to the end users, or a little bit more obvious. But strategic alliances with local and global partners are absolutely crucial. But this one thing you've all said, you've all mentioned partners, right? So you guys are working with Airtel and Prudential. And then, Curacel are working with AXA and Old Mutual, for instance. But can you just talk us through some of the challenges of actually securing, pursuing some of those alliances and actually securing them? Because it's not that easy. So, so if you, Ann-Elise, if you want to start, and then we go down again and talk us through some of the challenges you've experienced in doing that.
Yeah, our leadership team just came from an offsite, and one of the sessions was partnerships are hard, and we spoke about that for an hour and a half. Yeah, I mean, what we do, even on both ends of working with an underwriter or working with what we call the distribution partners, it's B2B sales, which is long and finding the right person at the right time who wants to push it, who sees the value in it. Takes a long time, and sometimes with a telco that does not typically have high retention rates. You meet one person, you get to that level, and then they leave, and you have to start all over. So yeah, it's a little bit of a long game for us. I think we've navigated how to shorten that window or try to identify who those right people are, immediately understand what the value they would see in it. But it is quite difficult in that sense, and I think it's also a timing piece. Is this the right time for that company to invest some resources? We at Turaco, we try to take a lot of the heavy lifting in terms of doing the marketing, leading in the integrations, really like deploying our telesales teams or our field teams to really push that. But we're going to need that partner to do something. We're going to need your resources, and so there's a little bit of, is it the right time for some key people on your team? Is it the right time for your tech team to give us resources? And that's always a key. And then maybe on the underwriter side, underwriters, we need them. I will say, are they as always innovative and wanting to think about how do we do mass market insurance? How do we make that product the right fit for that end consumer? How do we make those processes better fit for them and not be so traditional in that way? Those are long conversations as well, especially sitting with someone who's been in the insurance game for 30 years and hasn't seen it work. And why do I think it's going to work all of a sudden with this newish business 5 years in the making? So there's a lot of lobbying in that way of, no, we need to craft the product or the process this way to make it work for that end consumer. So it's a few conversations, lots of buying dinners and things like that. Yeah.
Very hefty entertainment bills.
Yes.
Chimezie, do you want to go next?
Yeah, I think there's also some bit of challenge with respect to education there, and also challenge with respect to, somebody mentioned brain drain earlier in the day as well. So in terms of education, most of the time you may be dealing with traditional thinking people. So you engage them and they are thinking traditionally, they're not agreeing with what you're saying. So you need somebody that somehow understands what you are explaining. So I've seen a lot of scenarios where you are trying to change a situation and they think you're changing it too fast, and they want you to slow down so that they too can even catch up. And you have to do a lot of education, you have to train and explain. There's also, in some instances, they also may be worried about funding of the process. Let me explain what I mean. when we try to implement some of the solutions we've done in the past, we met some government organizations, and the first thing they told us is we don't have cash to pay for this thing. So we had to become creative in how we implement the solution. In some instances, we say, okay, we'll give it to you for free, but we'll monetize it over this period through this other way. So I think we also have to be creative when we're engaging the stakeholders and try to make them understand that we can be flexible, right? Be more intentional about the education. And then we also need to spend a lot more time. One of the major challenges also is in brain drain. Something Seamfix is doing, we started up what we call the Next Gen Academy, where most of the times we get people from school when they are graduating, we take them into the company, we train them. A bulk of them gets their first coding experience in Seamfix, and then within a short period of time, a significant portion of them want to leave. You have Amazon and the rest of them making them offers, and they just immediately want to jump ship. So we've had our ambassadors in many of these big companies, right? So but what we've now done is to be more intentional about embracing that brain drain instead of fighting it, but more like to embrace it, be more intentional about training the people, getting them to scale up more, because knowing that this gentleman I'm talking with is going to leave. So in our interview process, we're asking you, when will you leave? When do you intend to go for masters? You say, I don't have. We say, we know you will go. Just tell us. Just be very open. We want to work with you, and even if it doesn't work out, because some of them, their worry is, if I tell you I'm going to leave in 2 years, and I don't get a visa, you most likely be replacing me. But that does not hold water, because most of them that came and gave us a heads up, and their visa messed up, we still took them back in. Because they first resign and tell you I'm leaving, then they go to the embassy to pick up their visa and nothing, then they come back and say, can I get my job back? And say, yes, come. I've been expecting that.
You don't have to leave.
You don't have to leave at all. So I think those are the things, the compromises we also have to be willing to make, and be willing to be vulnerable with them to get them to understand that, hey, it's okay if you want to go, but at least give us some heads up. Let's be aware. Let's plan with you and achieve your own objective. I think that willing to be vulnerable is very, very important, because it also makes the other person to be ready to trust you when you are also expecting the same from the person. You also need to be ready to offer the same thing that you're expecting from others. So I think in summary for me, the three major things, I think I kind of like countered it with what the solutions typically will look like. First one is on education. We need to educate more, be more intentional in that regard, especially the people who are trying to disrupt their process, so that they can understand more. Obviously, she's talked about the lobby process. Well, I think we also need to intensify, do more seminars or webinars or something like that, where we talk more with these people. Then obviously invest more in educating the people because we have a lot of, they finish building these tech solutions, the key person building it just leaves. Or even while they are working on it, the key person receives another offer from even the person from another company that is trying to build the same thing. He receives an offer and the person wants to jump ship. Even if you offer the person all the shares in your company, he still wants to go. So I think those are the things we need to look at. And then being creative on the aspect of funding, especially when you're talking with organizations that are scared that what you're talking about will cost them. If I give an example, in one of the sessions earlier today, the lady that was talking about MTN, one of the key challenges she may face is that MTN may need to invest over $150 million just to enable her get the capability that she's looking for. So if you are not making it clear to them how they are going to make that kind of money back, and you are going to be asking them to make that kind of investment, it may not work. So when we are talking with the traditional insurance companies or traditional people that offer this traditional finance, we should be creative in how the process should be funded and how they can afford it,
Henry?
No, I think a lot has already been said around the process, so skip it.
All right, so I'll go to my next question in that case. So, now, the one thing all of you have in common is that you're, one way or the other, you're helping to reduce credit worthiness risk. So can you just elaborate quickly on how each of your prospective businesses is actually doing that. I'll start with you, Henry.
Reducing credit worthiness risk?
Yeah, credit worthiness risk, because if you think about it as in, so with you, with the end consumer, it's like, look, if you are somebody who is actually buying insurance and you're paying on a frequent basis, well, that means that maybe a credit lender can then lend to them because they're like, oh, but they pay their insurance frequently. And through, ID verification, well, we know that, well, we've got a partnership with MTN. Oh, but we know that they actually pay their, phone bill frequently, or they, buy credit up front, pay it later, whatever it may be. So how do you think your business is actually, is part of that process in terms of reducing credit worthiness risk?
Yeah, and this again, we're an infrastructure business. Again, I think maybe I'll talk about it from a much more broader than just insurance perspective. So obviously the beautiful thing about when you look at the credit worthiness, we're talking about trust really. And so because we're embedding you're embedding within existing ecosystems, there's the assumption that ecosystem has enough data to be able to underwrite whoever that customer is, whatever embedded product that they're about to get, whether that's credit or whether that is insurance. So I'd say that when you look at credit worthiness, you see you need to have that player who has that ecosystem, but also who has, I think in the lending side I wouldn't even say, okay, cool, two parts: the guy who has the customer to some extent trust, and then your ability to mine that as well. For us, we're not here yet, but the exciting thing about insurance, again, not on the creditworthiness side, but in terms of personalization based on the data that does exist. So one of our key use cases is embedding within banks. So we're creating embedded with the mobile app of a few commercial banks in Nigeria, and so obviously right now the first use case is just is a bot thing on the app, but it's more exciting if there is that what offers you're seeing is based on your transaction and your history as well. So again, obviously that's kind of like a bit of segue from what you're asking, but for me, from a creditworthiness perspective, you need to have that ecosystem that has the data. I think I mentioned that second one because it requires a level of technology to be able to make that happen. Because yes, you might have the data, like we talked about earlier, and you don't have the ability to, we're talking about silos, but you might have the data and you don't have the ability to make decisions on the data, right? Obviously, we're in the age of AI and everybody's excited about generative AI. I think credit guys have done this very well, which is being able to figure out what credit you should get. There's a lot of, there's still that step to go for instance, insurance, where we can kind of figure out based on the data, all the transactions, what product is relevant at what time, and so on and so forth.
For us at Seamfix, we recently started a very ambitious project we call Verify.Africa, because we would like to aggregate all relevant identity and other databases, specific emphasis on the other databases, not just identity, across Africa. So that, and also on the back of that, we've layered a lot of AI services with face matching capabilities and biometrics and contactless biometrics, where you can literally take a phone and take a picture of your hand and generate the fingerprint from there to be able to do a match, which can be embedded inside so many other solutions. So for us, the way we're approaching it is more from a perspective of being able to deduplicate and guarantee uniqueness of those users, especially based on their biometric identity, and then being able to now offer those unique identity services to organizations. So we believe the risk gets reduced when you're clear who exactly you're dealing with. We believe if you're very clear on, okay, I'm dealing with this specific human person, and even if he likes, he should change his name. Let me give you an example. We tried a project sometime in the past on ghost worker elimination with several states in Nigeria, and you can't believe that you start with maybe 20,000 workers, and then you end with maybe 19,000 workers. The other 1,000 are people that just exist multiple times. And then you do biometric verification of these people, and the same persons show up almost 3 or 4 times each. So in one instance, they will come with beards, and they will insist that they are Muslims, they must wear a cap. Tomorrow they forget they are Muslims, they will remove their cap, and they will still have hair. The next day they will shave the hair and come back again. Then the next day they will shave their beards completely and remove the cap. They are trying to obviously look very different. And then you do a biometric comparison of all that. The system throws up with a very high confidence that this is the same person. And then you do a biometric investigation, you look at it, and you realize it's the same person. And then you realize that this same person is in Ministry of Agriculture, is in Ministry of Works, is in Ministry of Fishery, is in all these places collecting different salaries and pretending to be in the system. So if you were to now combine that same person across all these and guarantee that it's the same unique person, you start reducing that risk, that such a person will come in today as Chimezie. I obviously thought I was unique. What I didn't know was that many people may have tried to create a fake identity for me, which already is somewhere there in the system. So today you may have tried to come in, and tomorrow the same person tries to come in as you. Next day they try to come in as Emem. And before you know what is happening, the same person will be using all these different identities to attempt to get in. So if you're able to guarantee to some great extent that it's the same unique person, irrespective of how the person presents himself, then you've reduced that risk quite significantly. I don't know if that makes any sense.
You've got anything to say?
Yeah, maybe in some ways even on the partner level. So when we have lending partners, whether it's digital or more brick and mortar, one of the things that they tell us about a risk they face with their customers, and a piece of what Henry said about trust, is probably on average maybe like 15 to 20% of the reasons for default is a health emergency. That end consumer had to deal with a health emergency or paying for those bills for themselves or a family member, and could not prioritize paying for that loan. So I think there's a way that we've been able to, one, gather data from our lending partners to see, okay, where does that currently sit with you? And then looking at, case studies from what we're already doing and seeing how an insurance product, whether that is credit linked or it is an opt-in, that would cover it maybe in the sense of if someone passes away or if someone's hospitalized, how that can enable that person to be able to still pay their loan and their medical bills and kind of stay on track that way. So I think on the partner side, we're seeing a lot of receptiveness to wanting to do insurance, to build more trust with their end consumers, and their end consumers feeling like, okay, now I have this loan to be able to operate my business, but I also have insurance, whether that is property insurance or health insurance, that in case anything happens, I can still pay for this loan and then go back for another loan, as most people do.
Okay, I am conscious of the time, but there is one elephant in the room I would like to address around this whole issue of credit and lending. History has taught us from the West that actually what often happens is that when you give consumers the ability to borrow, especially with buy now, pay later, they don't realise how much they're borrowing and they become over-leveraged. And this is one of the big issues with Klarna, etc. How do we ensure that we don't end up repeating that same mistake on the continent? So actually what we end up with is consumers ending in indebtedness rather than credit actually helping them to solve a problem. Anybody want to take that?
I think the concept of embedded finance kind of like solves that to a large extent. For example,
if the data gets shared, yes.
If you think about it, let me give a simple example that they can even run with. If they were to go to an Ife Sinachi or a God is Good Motors and embed insurance, travel insurance in every ticket purchased, how would the person purchasing that ticket get over-leveraged? The person is basically paying for the ticket.
There's no use case for insurance, but maybe there is for lending, yeah.
So I'm talking about it from an embedded finance perspective. If it is, if you look at it generally, I think some safeguard rules can actually be introduced, especially if you are clear on who you are dealing with and to what extent you are willing to be exposed. I'm not sure if that is in place yet by the actors involved in those spaces, But I think it's something that they should really consider, especially now that, I mean, they should listen to this session. I hear you raising this concern.
Consumer credit protection
right?
is one of the things we have to think
Yeah.
about. We can't just ignore it. You go, oh, but embedded finance will solve the problems. I'm like, yeah, but it could potentially cause unintended consequences. This is going to be one of the unintended consequences that I think we can think about in advance, rather than wait till it happens and then everybody jump up and go, oh, this is what has happened.
Because I guess what's the solution, right? I don't even know if it's if an embedded finance necessarily exacerbates the problem, because how would this problem be solved? It would be that when you take the credit, it gets written on the universal ledger that is able to validate and prevent you from taking that again. So whether embedded or not, obviously, like there's an issue in Kenya, East Africa generally. I think Kenya mostly, like a few years ago, where because of how over leverage people were getting, people were borrowing and then using it to bet, and they lose all the money, and the rates were like 400% per month or some ridiculous number like that. So I think that's happening nonetheless. Like, it's not an embedded, I don't think it's an embedded problem. Obviously, I think a little bit what you were trying to say is if you're within, if Ifesinachi is a bus transport, for instance, where I don't think most people know what Ifesinachi is. It's a big Nigerian bus transport. So if you're within the Ifesinachi ecosystem, then they will be able to prevent you from taking more than usual. I mean, is that what you? Because I didn't quite get the.
Okay, so
but within the eco, so within the I don't think it's an embedded finance problem, right? I think the bigger problem is not that the lack of a universal ledger or people being able to share their data. I think it's been solved in the West. I don't know. I guess there's a regulation that forces you, if you're a lender, to make sure you report back to the bureaus or anything, right?
So before the banks introduced BVN in Nigeria, the same challenge that was happening. I go to Access Bank, I take a loan.
Yes.
I go to First Bank, I take another loan with a different identity, most probably, or even with the same identity. But so if Access Bank were to ask any other bank, does this person have a loan with you?
You can't know.
They can't know if it's the same person, because the same person can have different names, and they can't possibly search through all the faces that they have. So the moment they linked the identities behind the scene, it becomes easy to say, okay, well, do you have any other loan in any other bank? The person says no. And then you circulate to all the banks. This identity, tell me about your exposure. And all of them will start saying, bad market, don't touch him. It's very toxic.
But they don't do it through the banks, right?
They do it
through
through the credit.
So that's what I'm saying. So if there's a credit bureau. So I guess I don't think it's an embedded finance problem. It's a general problem. It's happening.
Yes.
So, but if you have a proper, credit bureau system, then like whether you're embedding, or whether it's direct, it's solved.
Okay, so down to the CRBs credit bureau systems. They've got to solve it. Not an embedded finance problem. Yeah, exactly. Right, okay, thank you very much for your time. It's been much appreciated having the conversation. For those of you that stayed in the room, if you could give them a round of applause.